Have you ever wondered how people make money while they sleep? You've probably heard stories of investors turning small savings into fortunes through the stock market. But then, you also hear horror stories of people losing everything. So what's the truth? Is the stock market a gold mine or a gamble? Today, we're breaking it all down simply and clearly. By the end of this video, you'll know how the stock market works, why people invest, and how you can start, even with just a few dollars. Let's begin. The stock market is like a giant supermarket. But instead of fruits and vegetables, people are buying and selling pieces of companies. When you buy a share of a company like Apple or Tesla, you're owning a small slice of that company. If the company grows and makes profits, your slice becomes more valuable. It's like planting a tree. You water it, care for it, and over time, it grows, giving you shade and fruit. Why do companies sell stocks? Imagine you start a small coffee shop and want to open more branches but don't have enough money. So you invite people to invest in your business. In exchange, they get part ownership. That's exactly what big companies do. They sell shares to raise money for new products, research, and expansion. When they grow, investors benefit. So the stock market isn't just about buying and selling. It's about becoming part of a company's journey. You can make money from stocks in two main ways. First, capital gain. Buy low, sell high. If you buy a Tesla share at $100 and later it's worth $150, you made a $50 profit. Second, dividends. Some companies share part of their profits with shareholders. That's like getting a small reward just for owning the stock. Now, let's talk about risk. Not every tree you plant will grow. Some companies fail. If a company performs poorly, its stock price drops. But you only lose money if you sell at a loss. Smart investors stay patient and invest in strong companies. It's like weathering a storm. You don't panic during the rain. You wait for the sun to return. Here's something magical: compound growth. If you invest $1,000 and earn 10% per year, you'll have $1,100 after 1 year. Next year, you earn 10% on $1,100. That's $1,210. Each year, your money earns money on its money. Over time, that snowball becomes massive. It's not about timing the market. It's about time in the market. The earlier you start, the more your money grows, even with small amounts. So, how do you start investing? Step 1. Learn the basics. Step 2. Open a brokerage account, your gateway to buying and selling shares. Step 3. Start small. Even $10 or $50 is enough. Step 4. Diversify. Don't put all your money in one stock. Think of it like a fruit basket. If one fruit goes bad, the rest stay fresh. Step 5. Think long-term. Investing is about patience, not luck. Let's look at a simple example. Sarah invests $100 every month in a stock index fund. She doesn't check prices daily. She just stays consistent. After 10 years, she's invested $12,000. But because of compound growth, her investment could grow to around $19,000 or more. Now imagine doing that for 20 or 30 years. That's how ordinary people build extraordinary wealth. So, let's recap. The stock market is where people buy pieces of companies. You earn through growth and dividends. There's risk, but patience and smart choices reduce it. Start early, invest regularly, and let time work its magic. You don't need to be rich to start. You become rich because you start. The best day to start investing was yesterday. The second best day is today. Take that first step. Learn, invest small, and stay consistent. Your future self will thank you for the seeds you plant today. If you found this helpful, give this video a like, subscribe for more beginner investing tips, and share it with someone ready to grow their wealth. Let's build financial freedom, one share at a time.